Good morning and welcome to the ONDO INSURETech PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Craig Foster, CEO. Good morning to you, sir.
Good morning, everyone. Thank you, Alessandro. So my name is Craig Foster. I'm the Chief Executive of ONDO INSURTECH. Thank you for joining today's investor presentation. We can already see we've got really great attendance to the call today. So today we'd like to update you regarding our recent progress and our immediate plans, especially with regards to North America, given some of the recent breakthroughs that we've made, and also in the context of the recent institutional placing and the open offer that we've made to existing shareholders. Thank you for submitting your questionnaires. We'll endeavour to answer some of these as we go through the formal part of the presentation, but there'll also be a Q&A at the end. Before I take us through the presentation, by way of introduction, I'm joined today by our CFO, Kevin Withington. If you've joined our previous results calls, you will remember Kevin from those calls. I'm also pleased to say that we're joined today by our chairman, Mark Wood. Now, Mark hasn't been on one of our previous results calls, but Mark has joined us on our recent institutional roadshow over the past couple of weeks, and Mark was also keen to join today. So we'll start by, as many of you will have not heard from Mark directly, I'll hand over to Mark just to make a brief introduction.
Thank you, Craig, very much, and good morning, everyone. And I just endorse Craig's comments. Thank you for the many questions that we've received, which we'll work through at the end of this presentation. I'm Mark Wood. I've been involved with ONDO from the period when we organised the management buyout from HomeServe, and then our subsequent listing through the RTB. So the presentation today, as Craig has described, follows our recent institutional fundraising exercise, and I was keen just to introduce myself. I'm a chartered accountant. My background is in financial services, predominantly insurance, and most importantly in this context, in property and casualty insurance. I was the chief executive of AXA in the UK in the 90s and built up the AXA operation to the form that it's in today, and then subsequently joined Prudential in 2001, running the UK and European businesses of Prudential. And then in 2005, I raised £500 million worth of private equity money to create a new insurance company, Paternoster, which specialised in buying out the obligations of defined benefit pension schemes, occupational final salary pension schemes. That was integrated into Goldman Sachs' similar operation in 2010. And since then, I've been working in private equity, most notably perhaps buying out the RAC breakdown service from Aviva in 2011, and then founding PensionBee, which is now a listed company, PensionBee PLC, which we founded in 2016 and floated in 2021. So very briefly, that's my background. Let me hand back to Craig.
Thanks for that, Mark. So we'll go through the formal investor presentation. This is exactly the same presentation that we've used in the recent institutional roadshow. Now, many of you on this call are likely to be existing shareholders, so some of this you will be familiar with, but nevertheless, we'll recap the kind of broad introduction to the business before we talk about the specific plans with regards to North America. So our mission, as you may well know, is to protect homes, reduce waste, and help the planet, given that there's an environmental angle to what we do. Our vision remains to become the world leader in claim prevention technology, specifically for home insurance. So the quick overview is we're a proven insurtech business with a solution specifically designed to prevent household leaks. We have a proprietary technology, a product called LEAKBOT, that involves a unique sensor technology that we invented and we've patented all around the world. that can detect small leaks in properties. And we combine that with an engineering plumbing solution that can then find and fix the root cause of the problem. Now, why do we do this? We do this because this is a huge problem for the insurance industry. It's the main cause of claims on home insurance, typically 20 to 30% of the claims paid out. And to give you an idea of the materiality for that, if you add together the UK and the USA, that's £16 billion worth of claims paid out every year to put properties back how they were before as a result of damage caused by leaks that you can't see in the ceiling or in the wall. It's also a problem for the planet. Water scarcity is an increasingly global concern around the world as a result of climate change, as a result of population growth. The UK, despite the fact that it rains all the time here, is not immune from this, and it's increasingly a problem here, especially in the south of England. And household leaks are a big part of that problem, surprisingly, and I'll go on to talk about why that is and how we can help in a moment. So we have a solution that's already been adopted by large insurance companies around the world. We've got 16 insurance partners in the UK, Scandinavia, Sweden, and more recently in the United States. This is, in every one of those instances, provided for free to the homeowner as part of the insurance policy and paid for by the insurance company to us, mostly on a recurring basis to provide those services. And also, more recently, we've been experimenting with partnering with water utilities as well, who are using this as a way to drive down those household leaks. So the business is growing, the number of registered customers has grown, and we have a defensible proposition here with 29 patents on this core proposition around the world. So here's a quick snapshot of some of the partners that we work with. Some names that you will be familiar with if you're a UK investor, insurers such as Admiral and Hiscox and Direct Line. And names probably less familiar, some big insurers in Scandinavia such as Top Denmark and Landschaffringar in Sweden. And more recently, some US partners, so Mutual of Enumclaw and Selective, and obviously most significantly Nationwide, who are one of the largest insurance companies in the United States. And we'll go on some more in a second to talk about the recent breakthroughs as we've launched 4 states in quick succession and proven that we can deploy this in the United States as we have done in Europe. So this presentation will be available for all of you after the call. So I'm not going to step through our exact potted history here, but as Mark already explained, this business was spun out of HomeServe, a company with a big expertise in services such as plumbing. And I set up an innovation lab for the HomeServe group back in 2014. And as part of that work, we invented this new way of detecting household leaks, which created this opportunity in 2022 through a reverse takeover transaction to float the company on the market as a separate entity. And since then, we've made a lot of progress. We've signed multiple partners. The business has grown significantly. And more recently, we've made this breakthrough in the US. So to recap the problem, I've already explained how this is a huge problem for insurers. There's 1.6 million claims in the United States and the UK every year. And the typical claim in the US is about $11,000. So it's important to remember this is not the kind of big escape of water that you might imagine. It's not the ceiling falling in and the person moving out of the property for a year. Those claims happen, but they're really rare. The typical claim for a home insurer is a leak that's a pipe into the back of a toilet or a pipe somewhere hidden behind tiles or under a kitchen sink. And it starts dripping slowly over time and it goes unnoticed until it's caused a bit of damage to that property. And with a bit of redecoration and reinstatement, quite quickly, that can be easily $10,000 or $11,000. And it is exactly those types of leaks that we detect. I already mentioned that it's also a big problem for the environment. The thing that we detect is the leaking toilets. If you see water running down the back of a toilet, that's typically 10% of toilets have that issue. And when they leak, they leak on average about 215 litres per day. And that adds up to a huge amount of water. By some estimates, there's an NGO in the UK, Waterwise, that estimates that if you could fix all of those toilets in the UK, it would provide enough running water to provide the needs of Sheffield, Leeds, and Manchester combined. And again, these are exactly the leaks that we can pick up and fix. So the LEAKBOT system is a unique technology. It's a self-install, low-cost sensor. We send it in the post for free to the homeowner. They clip this to the pipe. We typically get over 80% installation rate. And then if we detect a leak, it connects to an app, and we alert the customer to the problem, and then we connect them to a trained technician who can come to the house and find and fix the root cause of the problem. I've explained, won't go into this in a huge amount of detail. I've explained it on other calls in the past, but to anyone unfamiliar, the reason why this is a unique proprietary technology is we invented a new way of detecting leaks based on temperature fluctuations. So the device detects the temperature of the incoming water and compares this to the ambient temperature where the device is located. And by measuring the delta between the two readings, we can detect leaks. Down to about 3 milliliters per minute. So a small drip, and it doesn't matter where in the house that leak is, the device can pick it up. And the relevance of this is it's the only known non-invasive way of detecting a leak without physically cutting the pipe. So it's particularly relevant to this home insurance context. So that is the value proposition in a nutshell. We prevent insurance claims. It also prevents unnecessary wastage of water, which is good for the environment. And homeowners love the system because it protects their household bills and it protects their property. There's some recent customer testimonials here. You can read these yourself. They're all publicly available online. So you can see from our Trustpilot score and App Store score that the user experience, both the in-home service and the technology, is really great. So here's a case study from Sweden. Before we go on to talk about the US specifically, we launched a pilot in one particular region in Sweden, and as per the model, the devices were offered for free to Landeshaffengar customers. In that one test region, we penetrated 40% of the customer base. And also delivered a 50% increase in new sales during that test region. So we've since signed a 5-year rollout contract, so we can expand that offering across the Landeshaffengar's 2 million customers. One thing that Landeshaffengar wanted to do is they're a multi-product financial services company with savings products, banking products, other insurance verticals. And what they realized as part of this deployment, that 40% of their customers in this one particular region had an app on their phone as a result of their activity, albeit it was our app. So one thing that they've done is they've developed a new app to drive customer engagement and cross sales, and they've incorporated our APIs into that app. So their customers use their app to install the device. And they just launched that publicly over the last couple of weeks. The new news is how we've managed to replicate those types of results in the United States. So our value proposition, when we pitch it to US insurers, always goes down very well. US insurers have a bigger claims cost on a per property basis than in Europe. People pay much more for their homeowners insurance in the United States. They typically pay $1,100 a year for a policy compared to £200 to £300 in the UK. And so the claims as a proportion adds up to a much bigger number on a per property basis. Now, US carriers have tested competitive solutions where it involves physically cutting the pipe. And those solutions work, but they're usually $500 and they require a professional installation. So it's really hard to find a scalable business case. So the feedback we would get from US partners is, this sounds great. It sounds like the solution we've been looking for. However, can we believe that you can replicate the same kind of results in the United States as what you have done in Europe? Will you get the same customer satisfaction? Will you be able to deliver the actual fix the same types of claims as you can in the UK and in Scandinavia? So in the last 6 months or so, we've launched into Washington, New Jersey, Washington, New York, New Jersey, and Ohio with pure insurance, selective, mutual Venom claw, and nationwide. And you can see some of the results on the slide here. There's some customer testimonials, direct verbatim quotes from some of the customers, very similar to what we get in the UK. We had a net promoter score on the deployment of +80 and 100% satisfaction with the engineer visits. There's a quote here from Mutual Venom Claw where they said in the first 6 months when they were paying our $5 per month fees, they delivered a saving of over $150,000 in claims. Nationwide, interestingly, are obviously a much scale bigger partner than the other three that I mentioned. So they're a Fortune 100 insurance company. They're the 8th biggest insurer in the United States in home insurance, got about 3.5 million homeowners insurance customers across the United States. And what they're doing in this area is really interesting. They've invested significant time and effort building a smart home platform. And what that's designed to do is integrate with products like ours and ingest data on the API so they can enact real-time discounts on the customer's premium in response to the customer installing this type of technology. They've had that program certified, signed off by the regulators in 34 states already. And they've been looking for the right solution in leak detection, which is why we've signed the Perpetual Master Services Agreement to start deploying LEAKBOTs. So the first order has gone really well. As their VP of Personal Lines product says on the quote here, they see big potential for this across their customer base in the United States. And the first deployment has gone ahead of their expectations. And it's really the question that we're being asked by Nationwide specifically about where next and which states we're going to expand into. And are we, as a small UK company, going to be able to execute in line with their ambitions? And that's really the reason why we've been talking to institutions and we're talking to you today as we're funding to make sure we can support that growth and have the right infrastructure in place in the United States. So for anyone less familiar with the business, it's worth just recapping our economic operating model. So as I've already explained, the proposition encompasses an actual physical device that we manufacture and we send out to customers. It entails the software that we use to support the system, the APIs and the dashboards that we present back to the insurers, and also the consumer-facing apps. And it also involves an in-home repair service. In the UK, where we started, and in Denmark, we had a range of different pricing models where we priced independently for the device, for the software, and in some cases, a separate fee for the repairs. It's worth pointing out that we've evolved the thinking over time, and we think we've found the right pricing model that is optimized both for the insurance partner and for us. And that's the model that we've launched recently in the United States, where we charge a flat recurring fee that encompasses all of those services. And in the US, it's around $5 per month. And that's been really consistent across the deals that we've done. And the reason why this model works very well is it provides clarity to the insurer as to exactly what this deployment is going to cost on a per household basis. But it's really good for us because it drives long-term ongoing recurring revenue, which is ultimately the best thing for you and for us as shareholders to drive the ultimate valuation of the business. Also, the other thing that we figured out is the problem with that type of model is that can be a big working capital strain to build a recurring revenue business due to the lack of an immediate cash generation at the point when you ship a unit. What we've done to counteract that problem is we've been successful in the US so far of asking customers to pre-order whatever the first order volume is, to pay immediately for the first 12 months of fees up front, and then we can draw down against that as we deploy the units. And so far that seems to have worked. So Existing shareholders will be familiar. These are our last interim results. You can see that the customer base is growing. We've been successful in shifting our revenue towards the recurring revenues. And we've also seen significant growth in the number of households that we can address through the partnerships that we've recently signed. The most significant of which being Lancer Schaffringar in Sweden and also nationwide in the United States. So we're funding for growth, and the vectors of growth are continuing to grow our core insurance business in the UK and in Scandinavia, specifically the US expansion that I've already mentioned. So building on that breakthrough to penetrate both the new deals with customers like Nationwide and also sign more insurers and open new states, all around that consistent model. And third is continuing to experiment through the water company channel. Can we also start to open up that as a new route to market, starting in the UK? The chart on the right just gives you an idea for the size of the customer base as it was back in September 2022. We had about 50,000 deployed units. And the insurers that we'd signed were mostly high net worth insurers in the UK and smaller insurers. And they had a total number of insured properties of about 500,000. If you fast forward a year, because we'd signed Lancer Schaffringar, that had suddenly expanded to 2.5 million. So demonstrating the size of the opportunity in front of us. Since then, we've signed Nationwide, which has brought that number closer to 5 million. And if we also add on the immediate pipeline that we've got in the US, and by that I mean late stage deals where we're at contracting stage and we've provisionally agreed volumes and timings, it brings that addressable household base up to close to 8 million. So it gives you a sense for the immediate opportunity that we've got right in front of us. So the one thing worth just explaining in a bit more detail is with regards to the use of proceeds and how we're going to expand the operation in the United States. So to give you a sense for the baseline of where we are today, we're operational in 4 states. Our main employee is Jim Strickland, who some of you will be familiar with from other news interviews. So he's our US general manager. He's a sales guy by profession. He's worked in the property and casualty industry, selling technology products into these insurance companies in the US for the last 30 years. And that's what we want him primarily focused on. And he's the one that's done these initial deals in the United States. Now, that said, he's doing an awful lot of other things at the moment as well. So he's doing a lot of account management, managing the day-to-day deployments of some of these trials in a partner-facing role. He's also the only person who can do on-the-ground oversight of some of the operation, where we've currently got a couple of customer support people and 4 engineers on the network who are doing the repairs. The way that we would like to expand this is firstly hiring a US customer success lead to sit beside Jim. And that person we want is to manage all the existing partners in the US and manage new ones as we bring them on board, and to really farm those accounts and drive the recurring revenue and repeat orders from those customers, and making sure we're delivering on the return on investment for the insurer, which will really free Jim up 100% to focus on new business development and drive our growth in the United States. We also want to put in place a US field service engineer and operational manager. We're kind of doing all of that from the UK at the moment, which is quite inefficient, sending people back and forth across the Atlantic. And then we'll build out the customer support and the repair services as we go on a state-by-state basis. So the idea is not that we'll go across the US in one go with a small amount of LEAKBOTs everywhere, but with our partners in Nationwide, we're already talking about the shortlist of which states they want to go into next. And we'll expand on a state-by-state basis. So we recently completed a successful institutional placing where we raised £3 million. The placing price was at 14 pence, so a small discount to the previous close. We've also opened up an open offer to all of you as existing shareholders at the same price on a 1-for-10 basis. It's worth bearing in mind that directors and senior management between us have invested a further £100,000 as part of this fundraise, and that's in addition to the already significant investments that we made at the time of the RTO. So the company's growth plans are now fully funded in the US and in Europe. And it's worth mentioning that we've had support from 3 new institutions as part of that placing, in addition to follow-on support from 2 of our 2 existing institutional shareholders. So the timeline is the open offer closes on the 30th of May. We've got a general meeting on the 3rd of June, and then the settlement date is the 5th of June. And as we've covered, the use of proceeds is all about establishing that US administration and support facility to support those growth plans in the US, to fund the US rollout with sales, customer support, and engineers on a state-by-state basis, and then provide more general working capital for both the US and for Europe. So in summary, why invest now? Well, we've recently signed Nationwide. It's a Fortune 100 insurance company. They're the 8th largest home insurer in the United States, and it's very hard for a company, especially of our size, to make it through that procurement process and become a supplier on a national basis in the US. Part of what we needed to do to even make it through that process was to prove to Nationwide that we could achieve the ISO 27001 certification, which we formally announced just this morning that we've received that certification. Even in the launch state of Ohio, Nationwide have got 180,000 customers, to give you a sense for the scale of these guys, but they've got over 3 million customers across the United States. So we've got immediate market opportunity with the partners that we've already signed, up to 5 million, and immediate pipeline opportunities with deals at a close stage in the US that will add several million more. We've got a successful recurring revenue model that's proven. We know how to do it. And all the US contracts are on that $5 per month recurring revenue basis. And the major R&D on that core product is all complete. So we're really in the stage of just growing and commercializing that at this point. And this fundraise is to really accelerate the growth on all of those fronts. So that is the end of the formal presentation. Thank you for all the pre-submitted questions. And I think, Alessandro, over to you. Will we move now into the Q&A?
Yeah, perfect, Craig. Thank you very much for your presentation. Just while the company take a few minutes to review the questions that have been submitted today, I'd like to remind you the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you mentioned, we did receive a number of pre-submitted questions. And Craig, if I could just hand over to you just to maybe start with those, that'd be great. And then I'll pick up from you at the end.
Okay, thank you very much. So yeah, we've got quite a few questions to get through. So I mean, we'll do this fairly informally. So maybe I'll start at some of these, and then Kevin, Mark, if there's other perspectives you'd like to add, then just feel free to chip in. So one question we had is, can the company share some of the forecasts of the broker research? Some of this is only for institutions. Can we know the target price, sales forecast, and some key metrics? So our house broker, Dowgate Capital, have published a few different research notes. The last one was on the 26th of February. So this research is available on the Dowgate website for investors. So if you register to receive that research, I will, if this works, just to direct you to exactly where that is, I've put a link in the chat that will take you to where that research is available. Another question we had is, Ting is being deployed extensively with State Farm. Can you comment on the status with the top 10 insurance companies? Who have you approached, and what's the status? Obviously, Nationwide are a top 10 insurer. Jim has been working hard, and I've been helping getting into and starting conversations with some other top 10 insurers. So I can't disclose specific details, but already a couple of them are live and active leads that we are progressing through that sales process, and certainly are the restriction is management bandwidth, honestly, about how many deals can we actually execute and land. The reason why we want to hire the customer success manager is it frees Jim up 100% to focus on new business development. And we have a pre-identified candidate actually that also has numerous links across the top 10 based on her previous role. So more news to come about that in due course. But the quick answer is there's a couple already in that top 10 that are live and active leads that we're pursuing. So a few more questions on the US specifically. Can you give details on how the smart home initiative is expanding with Nationwide? So Nationwide have obviously stated that they believe the smart home technologies is going to play a really key role in the future of their homeowners' business. And this smart home platform that they've developed is really quite unique. We've not seen any other insurers in Europe or in the United States do that type of technical integration. So the initial order and the first launch, they've shipped the devices having, even though they haven't finished that technical integration on LEAKBOT, which they're just finishing off now. But they've already, like I mentioned, had regulatory approval for this smart home program across 34 states. And I think what I really like about it is the fact that there's a real incentive for the customer, because you will see a monthly discount on your premium from having installed the technology. Now, the key thing is, what technology are they going to offer and what will really deliver a claim saving? So they found one thing, a product called Ting, that prevents electrical fires. So you plug it into the mains and it will detect electrical arcs and then connect you to a trained electrician if there's a risk of a house fire. So this is something, although house fires are much less frequent than water leak claims, obviously when they happen, they're much higher value. And Ting seems to have had some success in being able to prove that return on investment with US carriers. So I think Nationwide have deployed about 50,000 of them already. I think State Farm have deployed almost 500,000 across the United States. And so Nationwide are looking for products like that they believe really has a claims mitigation benefit. And frankly, they've tried other things on water leak, as have many US insurers, and found that there's just no real business case. There are the point sensors that don't deliver a claim saving, or they're these plumbed-in systems that are really expensive. So Nationwide, the way they talk to us, they don't talk to us like this is a pilot. They've already nearly completed all of the technical integration. The nature of the contract we've got with them, we don't need any other contract to roll this out with them as we go state by state. We can just enact subsequent orders attached to that contract as we go. So we will exhaust that first order pretty soon. We're already talking to them about what states they want to go into next. And that's about as much as I can say about Nationwide at the moment, but obviously more news to come. Another question on Nationwide: are the addressable households attributed to Nationwide just those on their smart home program? So no, they're not actually. So although the smart home program is a really interesting initiative, I think even for LEAKBOT, the ambition is broader than that. So they clearly, as a business, want to make as big a difference on claim savings as they can through this type of technology. And it's worth bearing in mind in the US, this is in a context of rising claims costs because of inflation across the board. So this is increasingly putting pressure on insurer margins all across the US. Yeah, I mean, watch this space and let's see what happens. I think one thing that we're picking up is US insurers starting to think a bit more radical compared to insurers over here in Europe, and thinking about starting to make these types of technologies mandatory for new customers. So make it an actual mandatory policy requirement as part of the insurance. I guess much like a car telematics black box would be on a car telematics policy in the UK, for example. Yeah, we see the applicable addressable market as being all of Nationwide's customers across the US. And another US question on a similar topic. The US pipeline seems to add another 4.5 million users. This implies we may not have larger companies than Nationwide in the pipeline. Can you comment generally on the approaches to top 10 insurers? So I've probably covered that already. So in the numbers we used there, I think we included one pipeline prospect because that conversation was at a much further stage. And but like I say, there are others in the mix that weren't included in those numbers as well.
I think, Craig, it may also just be worth highlighting that since the Nationwide announcement, Jim's job really has been about fielding inbound calls as well as making approaches. And I think that, that's really the big thing that's changed with Nationwide. We've attracted the attention of Nationwide's peers who are calling up and wanting to know more.
Yeah, and I think that's exactly right, Mark. And I think that is a common phenomenon in B2B sales, especially with technology products, where companies tend to look very carefully at what their peer group are doing. And Nationwide is such a big name and well respected that the fact that they've partnered with us and backed us so publicly, and they've been very, very keen to back us in that way, I think has sent a really good message across the industry. And there's nothing exclusive about this as well. I think Nationwide are quite happy for other insurers to deploy the technology, and they see that as a good thing generally. So there is in no way like a kind of exclusivity around what we're doing. A couple of questions about manufacturing. So what is the current manufacturing capacity? And are there any plans in the pipeline to increase this? So the capacity we've got in the UK is up to about 240,000 devices a year if we push it. So that's enough to meet our near-term needs. The manufacturer that we use are part of a much broader group, and they've got facilities around the world. So we have already got a plan in place with them to open a second facility in North America. As and when we should need it. So it's a relatively easy thing for us to replicate. And, we could just replicate exactly the way that we manufacture it with the same kind of test rigs and everything in a second location and run the two things in parallel. Related question, is it likely that the cost base for US manufacturing would be lower than the current cost given economies of scale or larger potential supply pool? So yeah, I think it is likely. Labor costs are obviously going to be cheaper in Mexico than they are in our UK factory, I would imagine. And also at those volumes, there probably will be further economies of scale. How much and what is that worth exactly on a per unit basis? I don't know at the moment. So there was two questions related to the same thing. Is there any update on the Australian trial? Could you provide a progress update on the collaboration with Firemark Collective and IAG to test the all-weather outdoor version in Australia? So to recap, if anyone doesn't remember that, there was an announcement last year about us partnering with the largest insurance company in Australia, IAG. Well, their innovation, the innovation part of that business called Firemark Collective. And the background to this is IAG approached us and said, great news, we've selected LEAKBOT to be our solution for home insurance to prevent water leaks in Australia and New Zealand. To which our response was, not so fast, because we don't think our product will work in Australia and New Zealand. And the reason we thought that was because everywhere we've deployed the product today, the rising water main comes underground and then up into the property. And the device is located near to the stop tap where that enters the property. Given that most of the people on the call are probably UK investors, you'll know where that is in your house, under a sink or in a basement, something. In Australia, in most of the parts of Australia where it doesn't ever freeze, the rising main comes out of the garden and into the side of the property. So, and then it branches into the cavity wall. So there's no access from inside the property. Now, our device hasn't been weather sealed. It wasn't, the algorithm wasn't designed for that extreme kind of fluctuations in temperature. So IAG's response was, we said, look, we'll let you know if and when we have a solution for that use case. Their response was, well, what if we fully fund that as a project and you develop something and we'll fund the R&D costs? So that's what we've been working on. We haven't put any formal update, but you know, I can basically say enough to say it's going well. So we think we've figured out how to do it. We tested early prototypes with really good results, and we think we've cracked that modification to the product to solve that use case, to the point where we also think there's some unique IP that we can protect. And we're just now scaling the project. As part of that IAG project, we're now scaling that testing into more and more homes across Australia. So I enjoyed this question. There are so many companies on the main market that create hype to generate cash flow for themselves. What makes you stand out to the crowd? Are you a genuine business? So I think I thought this is I liked the style of that question. So yes, we certainly are a genuine business. And Mark, you might like to add to this one as well. I mean, my answer would be, why are we a genuine business? We're a genuine business because we're addressing a real high value problem for a huge industry that's fairly consistent around the world. And it's a growing problem because of that cost price inflation. And we have a proprietary solution to that problem, something that's defensible. There's an IP moat around it. And we've got a proven go-to-market model. We've got proven traction with big insurers. And now it's a momentum game. And I think it's proven evidence that it's a genuine business. We as a management team and directors have invested a significant amount of money, mostly at the original RTO, but also as a follow-on in this round. So you can see that we absolutely believe in the potential of the business and believe that this is a genuine business. Mark, would you like to add anything to that one?
Yeah, it may just be worth mentioning why I chose to get involved and why I invested. As Craig says, I mean, this application is a benefit to every insurance company in the world that insures escapable water, and escapable water is a major category, as Craig has described, the major category of claim within household liability. And in my mind, this, the unit cost of fitting this device is comparable, actually a lot less than a good quality lock on the front door. And no insurer in the world would insure a house without a lock on the front door. And so I think we'll get to the point, and we're beginning to see the first signs of this in the US with Nationwide and the interest that that's stimulated. I think we'll get to the point where this becomes an essential for insurers, and there will be insurance policies that only pay out if you have a LEAKBOT installed. So I think ONDO has enormous potential given this parallel between this piece of technology that identifies a leak early enough to mitigate the claims cost, and the approach that the insurers take to, for example, an appropriate burglar alarm or indeed a lock on the front door.
Thank you, Mark. Let's see, what else have we got? There's a couple of questions about water companies. So what progress has been made with regards to a dual billing strategy for insurance and water clients? Can you comment on the results from Portsmouth Water? They've indicated LEAKBOT has a temporary role until water meters are rolled out. Can you comment on LEAKBOT versus smart meters? So, I mean, water companies all have various different plans to deploy smart meters, from now or through 2030 and beyond. And they're all publishing different plans on how the kind of rough idea of how they plan to approach this. So smart meters are obviously primarily designed to make billing easier, so they can read the water consumption from a distance. But they can also detect leaks, especially larger leaks. They don't have the same degree of sensitivity as a LEAKBOT, but they can detect large flows of water. What they can't tell you is where that is because of where the smart meter is. It could be that it's the underground supply pipe in the garden that's leaking. They don't know that it's a leak actually in the house. And smart meters certainly can't detect a leak as small as what drives the insurance use case. I think what the question is referring to is Portsmouth. We did a small pilot with Portsmouth, and they've then published their what's called an AMP plan to the regulator, like a business plan for the next 5 years through to 2030. And what they've said in there is they want to use LEAKBOT wherever a smart meter is not appropriate for the property. So, I mean, we're still finding our way with insurers. We're still trying to figure out if there's a role for us to play. We certainly had a huge amount of interest from the water industry. And I think what the Portsmouth plan is referring to is there are certain properties where a smart meter is not appropriate. It's not commercially viable to fit one, or for a whole host of reasons, it's not suitable for a smart meter. And what they want to use is a LEAKBOT to kind of fill in those gaps. And that is one kind of relevant use that LEAKBOT can play with the water companies. So, I mean, we're still experimenting. We've done a deployment recently with Southwest Water, and they were using it for a different region, just hitting a really water-stressed particular area with a quick deployment of LEAKBOTs to try and immediately drive us to go in the home and fix some leaks and to drive a water saving. So, I mean, we're still figuring that out and experimenting with the model, and also experimenting with ways that both the insurer could contribute to the cost in addition to the water company. And we've got a lot of interest from the insurers on that. So yeah, we'll continue to update as we learn more about the model and how it can play out.
Craig, I think it might just be worth commenting on the purpose of the smart meter in the context of water conservation with LEAKBOT, because I guess just listening to your characterization of the very successful pilot with Portsmouth, people might conclude that actually smart meters will make LEAKBOT redundant. Of course, the key element of our IP, the worldwide patented IP, is that it detects very, very small flows. Mm-hmm. And it's this concept of interrupting the process of a small leak somewhere causing damage out of all proportion. Whereas a smart meter is designed really to detect abnormal use, such as a garden irrigation system with a leak in it that's spewing out water, other water waste, really. So although superficially the Portsmouth comment might suggest that one day LEAKBOT will be redundant, they're actually very different applications and different technology.
Yeah, no, you explain that very well, Mark. Another one here, LEAKBOT has a high impact from initial deployment. Are the contracts with companies for a fixed set of years? If not, is there an incentive for them to only use LEAKBOT for an initial impact? So the question is right in terms of the LEAKBOT does have an immediate impact because we immediately find some pre-existing leaks and can fix them. However, the benefits do accrue over time. So it's not that we fix the leaks straight away and then there aren't any subsequent leaks. Although the incidence of leaks drops from year 2, that we still carry on detecting leaks. So the insurers are always motivated to carry on keeping the systems detected and carry on with the service so long as that remains a customer. So is there a minimum contract on a particular device? Yes, it varies by account. So we have a range of different minimum terms from a year, sometimes up to 2 or 3 years. But the key thing is, if that's still an insurance company customer, they will want to keep that connected because of the ongoing claim saving. So there's been lots of questions coming in as we've been talking. So despite all the positive news, the share price has dropped 30% this calendar year. What are your views on this disconnect? Well, I'll put that to Kevin and Mark as well. I mean, it's very difficult to know, as always. I mean, I think it's been largely down to the fact that we were going to need to raise money was kind of anticipated a bit by the market, especially given the recent contract wins in the United States. And I think that expectation has maybe driven some of the share price decline. It is a disconnect because it has gone, it doesn't represent the progress that we've made and the progress we continue to make. So certainly our hope is that we'll bounce back strongly from this point. Now we've sorted the funding. Mark, anything that you would add to that?
Well, reading the FT as recently as this morning, the big story there is Jupiter's chief executive commenting that people are beginning to realise that the UK listed stocks are for sale at a discount, and the rise in the FTSE, I think, is expected to lead to a broader rise in investor recognition of the value of cash flows. I mean, anybody that looks at our business on a discounted cash flow basis, the traditional way of valuing a company that has recurring income, would have to say that the pace at which we're building in an endowment, building in this sort of annuity concept of fees being payable for deployed devices, and Craig's earlier comments about insurers in the second year and third year and fourth year of a contract being particularly motivated to promote LEAKBOT because of the higher retention rates they get on policies, suggests that this annuity is a pretty valuable component of our business model. So you would have thought, standing back and looking at recent news and looking at the discounted cash flow concept, that the shares are very significantly oversold, and the reason for that would be people shorting their positions in anticipation of the capital raise, as Craig has said. Do have a look at the link to the investor research, because that in particular looks at the model and what the embedded value of the current contracts is as those contracts develop over the coming years.
Yeah, very good. Thank you, Mark. We're running out of time, and I don't think we're going to be able to answer all of these. So I'm just going to pick the ones I think are definitely important to cover. So somebody has asked, what does it mean when you say a 10-for-1 basis for existing shareholders? So I think what that means is for every 10 shares that you own today, you have the opportunity to buy another one at the offer price at 14p as part of the open offer. It's also worth mentioning that I think there's the opportunity to subscribe to buy more, because obviously some people won't take up the offer. For example, the management team have taken part in the placing, so our open offer rights won't be used, and some of those will be sold back if anyone wants to buy any more.
Although I am taking up all of my rights under the offer.
And doing the placing, yeah.
Yeah, you are.
Placing, yeah.
Let's have a look. So this is obviously a pertinent question. There have been a number of shareholder dilutive activities, including warrants. Can we expect this practice to have reached an end? With this lasted fundraise, will you reach positive cash flow generation to support growth and/or access debt financing? So yes, we've raised sufficient funds to meet our stated growth plans and provide sufficient working capital, certainly for the next 12 months, as it lays out in the prospectus. With regards to reaching break even, so we as a company haven't put out a specific forecast in this, but I can point you to the Dowgator analyst forecast, which shows us breaking even in the second half of FY25. With regards to warrants, I mean, we used warrants in the past at the time of the original RTO, and some warrants were in existence back when the listed entity was Spinnaker Acquisitions. So now I think we've with Dowgator as the broker, I don't think there is any intention to issue warrants, and especially now as we're moving, we've also added institutions onto our shareholder register. I'm learning some of this recently, but I know that they're not particular fans of warrants. So I think the short answer is we're not anticipating we'll do any more of that in the future.
We haven't issued any new ones, have we, either? So the position with the warrants is as it was at the last set of financial statements in March 23, less the exercises, and the average warrant price is very close to what was in those financial statements of about 22.5 pence. So yeah, so there have been no new warrants issued in the last 3 to 6 months. Actually,
and of course, Kevin, it's worth pointing out that as the share price rises and the warrants are in the money, it's a further source of funding for the company.
Yes, yeah, and we have had, and when we publish our full year results, you will see that we have had warrant exercises during the period, which are obviously announced as part of the voting rights periodically, so investors can see what's gone through.
Okay, last few minutes. So if you've submitted a question and we haven't answered it, we'll publish answers to all of these afterwards and consider everything that's been submitted. What would the board point to as the most significant current or future inflection point that may not be appreciated by the market? Maybe would you like to take that? Not to put you on the spot, Mark. What would you say to that?
Well, I think we've touched on one or two potential inflection points here. The Australian funded research, of course, is also applicable, even though it snowed last year in Texas. It is relevant in terms of deploying the kit in climates where the water supply is not within the home, not underground and then into the building, but underground, overground and into the building. So that opens up a target market beyond the capability of the current technology. We've commented on the inbound inquiries that we've had in the US, prompted by the announcement of Nationwide. A couple of years ago, we saw the chief executive of Top Denmark comment on the 2% benefit that Top Denmark had derived from deploying the LEAKBOT devices against their claims ratio, which is really an astonishing, to have a single initiative that reduces your claims ratio by 2% is really quite extraordinary. As we roll out with Langshafen in Sweden, and as we see the rollout in the US, my expectation would be that we would be getting further endorsements of the financial impact on the claims reserve of deploying LEAKBOT. And of course, you get into a virtuous circle at that point, because you then get into an analyst presentation with, I don't know, Royal Sun Alliance or Aviva in the UK, or State Farm or Allstate in the US, and the analysts say, well, we see Nationwide are getting a 2% benefit on their claims ratio. What are you doing that's comparable? And so it gathers a momentum. So those would be three things that I just draw out from the conversation we've had here regarding inflection points.
Yeah, very good. The other thing I would add is sometimes there's a comment from shareholders where they say, unless there's like a 1 million unit order from State Farm, that's the only thing that I would see as being like a significant kind of inflection point. And the thing I would add to that is, having spoke to our friends at Ting, who are up to 500,000 devices, I asked them and I said, how did that go with State Farm? Did you just one day get a 500,000 order? And they said, no, absolutely wasn't like that. We had a master services agreement, and then we slowly expanded a state at a time, an order at a time. And their orders were for 2,000 units to start with, then 5, then 10, and then 50,000, and then subsequent orders of that kind of magnitude, or maybe it's 25,000, I can't remember. And so it was over time. So what I will endeavour to do is to keep updating as much as our partners will let us put things into the public domain about the steady progress that we're making as we add new partners and as we expand with the existing partners, as we launch into new states, as we deploy more and more devices. So investors can sense, month to month, how is that expansion going? Because I think that's how those contracts will evolve over time, rather than there suddenly being like a 1 million unit order in one go. Which, by the way, would cause us all kinds of a headache anyway, if we had to manufacture a million overnight.
That is a problem that we would solve, though, wouldn't it?
Yeah. Oh, absolutely. Yeah, absolutely. So, Alessandro, I think we're on the hour. So, any questions that we haven't answered, we'll consider carefully and see if anything that we've missed we can publish responses to.
Perfect. Thank you very much for answering all those questions from investors. As Craig has just mentioned, the company can review all the questions submitted today, and we can publish those written responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Craig, I was just wondering if I could ask you for a few closing comments.
Yeah, I think my closing comment would be to thank everyone for their support. I absolutely recognise the frustration of some shareholders as the share price has gone into that decline, as one of the questions referred to, and obviously myself and Mark and all the board feel that too, as we're all significant shareholders. But it does go totally contrary to how things feel on the inside right now. The recent gains that we've made in the United States, the confidence that we've got that this solution works in that US market, is really exciting, because we know that we just need to keep doing that, and that momentum will grow, and the confidence in this as an industry standard solution in the US will continue to grow, and we're looking forward to executing on the back of this fundraise. So thank you for your continued support.
Thank you indeed.
Perfect, Craig, Kevin, Mark, thank you for updating investors today. Could I please ask investors not to close the session, as you'll now be automatically redirected to provide your feedback, and the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team for ONDO INSURTECH PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.